All right, recording has started. This is Brian Wilson. I'm market strategist here at Edge, joined by Henry Howard today, who's our director of client services. And Tim would join us, but he's on a bike in Spain right now. So I don't think it would be quite as effective. He'll be gone next week as well. But we're very happy to be able to join you today. We're going to start off with Henry. He kind of has a process that he likes to follow on a daily basis, and then I have a few points that I'd like to cover. Just a couple things to keep in mind in terms of ground rules. If you would please mute yourself, during the discussion itself, and all questions are welcome. So with that, we'll turn it over to you, Henry.
Great. Thank you so much, Brian, and thanks for to everyone for joining us today. I'm glad. I was wondering if Tim might zoom in from his bike in Spain like he did on his way to Texas last time, but that's not the case. So let's get started. Again, my name's Henry. I'm the client services director. So if you write into our chat, I also handle the desk notes on Wednesdays and Thursdays when need be. So I'm going to go ahead and show you. I'm going to get started on Market Structure Edge. I know we have a couple new folks from Interactive Broker, and so we're going to walk you through the dashboard right now. And I'm going to take you through, really these fundamental aspects of Market Structure Edge, of how we read the market, how we utilize data. This is algorithmic data. It's data that's been processing via exchanges that we upload here, and that gives us a really good look at the market. And so I'm going to walk you through my daily process. It's a handful of really simple steps. I tend to always include it in the desk notes. But let's go ahead and get started right here. Obviously, broad market sentiment. That's every day. We just want to know on a scale from 1 to 10, where is the market? And obviously, again, if you're new, we have our red line up here, which Brian pointed out Monday that we're reaching those red line conditions. That the probability when we exert ourselves in broad market sentiment over the red line, the probability becomes higher that we're going to have declines. Same with this green line down here. That's sort of our low bar. When we're flattening up, the tendency is to go higher from that low line. So in addition to that, we also have our short volume down here. So this is really interesting as we look at the gains from the last early in September. Just seeing this downward trending. So really, in hindsight, I'm saying, oh, look at all those gains that we had since September. Those are really due to short covering, that a lot of that movement. So that's the first read, is to really get understanding supply and demand and supply balance. And we want to see divergence. We want to see this declining short volume, and we really like when this is rising. Even in this section here, we kind of stagnated while demand fell, and now as we flattened out and we had a short covering, we saw this upward trend. But today, flattening it, we know from 5.9 to 6 to 6.1, we're really starting to stagnate. And we have the saying at Edge, it's weak tops precede drops. So when I see a top up here at 7, and then through this next monthly cycle we're getting to 6.1 and we're sort of huffing, I know that that's not the best thing for upside. In addition, we see this increase in short volume supply. That would give me the indication that now's not the best time to put on longs. So that's really the basis of what Market Structure Edge is. That's the data. So I get questions of a lot of the time of how is this calculated, how do we utilize this data. This is aggregated from exchange data that then we process through our algorithm and make it available to you all. So that's broad market sentiment driven by the State Street S&P ETF. That's our best metric for the broad market. The second thing I do is we have these 1 and 2, these momentum and low volatility portfolios, because we really recognize those as 2 driving forces in the market. And what I'm looking for in these 2, in this momentum portfolio and in this low volatility portfolio, is the number of companies that are in each of these portfolios. So obviously momentum at 7. I mentioned it this morning that we're really starting to see the shift. We have momentum names decreasing. We have low volatility names increasing. And so what I'm looking for is, where's that money flowing? Because we know it's we know it's flowing out of the more volatile stocks and into the low volatility. So we recognize that. The other thing, when I see 7 companies, or even yesterday when I wrote the note, I think I said I don't love any of it. You can look at these names, and there's certain names that I look at. This is just having done a lot of market research in the past and saying, what do I love about? There's certain names that pop up that I go, oh, I love those names, and then other times I look at some of these names and I go, I'm not. Those are the names that tell me that it's time for risk off, and we're getting to the end of a move. So again, the number of momentum names, the number of low volatility names. So that's the second. I'm aligning those things. So we have a sort of topping broad market sentiment. We have just a few names. This momentum name is decreasing, so we know kind of at the end of a move. And then the third
Hey,
thing I'll
Henry,
look.
could I interrupt for a second? In
Yeah.
terms of like, if you're looking for a good momentum market, like how many names would you be, let's say, looking for in the portfolio, perhaps on a consistent basis?
I would say 12 to 15, but
Okay.
I'm also looking at that trend in names. So in momentum since Monday, we've been, I think we were up to 21 or 22, or, even higher than that earlier this month. And, we've been slowly ticking down those names. The sort of surprising thing is that these low volatility names are ticking up. And so that's why I mentioned, it's like I see that and I go, oh, there's a little shift in how the market's participating. It doesn't mean it's fully risked off. It's not that it's moving out of equities. It's just moving to names that have that lower volatility. So if I'm, whether I'm positioning my portfolio or I'm actually trading names, I'm looking for those, they don't give you as much volatility, but that's the point, is that you're not going to get the loss on if there's downside. So we can see the market sort of shifting towards that low volatility. But yeah, good point, Brian.
Mhm.
I would say, it's when I see it go from 8 to 12, I go, okay, here comes the wave, and here
Mhm.
comes, and in the same pattern, when I see it go from 15 to 12 and now down to 7, I go, okay, I'm, and there's a lot of names in there as I see, not necessarily from a market cap, but just from a price. When I see the names that are, $12 to $17 in momentum, I go, I don't know if these are the names I want to trade now. Unless there's a handful
Yeah.
that I'm pretty confident in, but that you can trade that volatility one way or the other. But I just don't like getting stopped out. So those are the broad market sentiment, number of components, momentum, volatility, and then such a share of the trading volume is sort of consolidated in our big tech portfolio. I still have like Shopify and Netflix in here, which I don't love. I sort these by market cap. I might drop some of these names here just because I really like, so much of what we're looking at in the market is consolidated into these handful of names. So obviously, what I said, I'll sort them by market cap. I'll also sort them by demand. And what I'm looking for is, number one is, are they moving together? So when we have like the whole bent of these top 6 names, 7 names, when all these names are moving upward together, that's a great time to get long your ETF, or leverage your portfolio. I'm not leaning that way, but that's a really good risk on perspective, is when these are moving up. Similarly, though, that's when they start to reach 10 and I watch them fall together, that's when we know that like the indexes are also going to fall as well, and there's going to be a risk off in these bigger names. And so you just have to be aware of that. I mentioned on Wednesday that see all these names at 5. These short volumes relatively aren't terrible. I mentioned Google this morning, and Microsoft. Really, what we're seeing is that these low volatility, low supply, low supply. So there's sort of a safe haven into these names, as long as they stay over 5. If there fails to be demand for these names, that becomes an issue, and that's when I kind of avoid. So I'll just pause there. Those are sort of the 3 primary things. Unless you have other questions, you can sort this by clicking demand and see, they're all sort of in the middle here outside of Tesla. We'll mention Tesla later about earnings and how we, maybe don't use data for earnings because it can trade wildly. But other than that, that's kind of our look at of what's happening in the market today. And then it's only after I've evaluated those 3 aspects is that then I will go into daily trading ideas. So again, our interactive brokers users use daily trading ideas. That's their view. So, I think Brian and I differ here. He goes top to bottom, I go bottom to top on probabilities. But again, I'm noticing the names that are populating, and I'm pulling up these names just looking at their chart, and sort of seeing. I think a lot of what you're trying to do is find stuff that you're familiar with, that you're comfortable with, but also the value of these probabilities is that they're back tested 90 days to say, when these conditions existed, how consistent were the returns? And so, Reddit, Siri, all of these in the last 90 days, when they had these conditions, the price went up. So those are high probabilities, like Tim always says, past results are not indicative of, are not a guarantee of future results. But we do know those probabilities are high. But as we said before, it's also in relationship to the broad market. So there's our our high probability names, and depending on what they look like and where they are in their daily volatility, we can choose some of those names. I tend not to hang out a lot in low vol, but I moved there this morning because there's actually, I highlighted these in 3 industrial names. Google held up really well, and a couple of these other names that were even in momentum yesterday held up really well, despite the market being down. So those are, that's what I'm watching for. And in the broad market, depending on how sort of confident I am in an upward move or more of a sideways move, that's where I'll look at these high entries, low entries. I think I highlighted yesterday. I highlighted one of these, and it was a low entry, and it went $1, but I forget what the name was. But it went $1 below the low entry. But then by this morning, it was back up. So those are the kind of names where, like, I'm really interested in these high probability names that are maybe even like they've, someone had asked the question about entries. And so I'll look for something that has this low entry, and I'm not watching it closely, but I might peek at it midday. And if it's really sold off, the likelihood, if it's got a high probability, I may buy that dip through the close. And I know we talk about Tim loving the overnight trade, but the point is, the market is always sort of looking for those midpoints. And so when these high probability names are really sold off, especially in a market that we think is going to go sideways, or at least recover from a sell-off, that's helpful. So that's the data. We're going to talk about some context, some risk events, and how we, all this. There's a reason we have broad market sentiment and we have context. I haven't talked a lick about context yet, but this is how you read Market Structure Edge. This is how you look at the data. The context, I feel like, comes in our daily desk notes. We always put the context in there, a lot of both data releases and just what's coming up in the market. So I'm long-winded, so I won't be much more. And if you have any questions, feel free to type them in the chat. And I'll stop here, and I'll toss it back to Brian unless you have questions.
Perfect. Thank you. Greatly appreciated. Terrific job, Henry. Really appreciate everything that you do. As you've noticed, Henry does a great job with the market desk notes, and part of what we're trying to bring to the table is just to bring different perspectives to you. Tim looks at the market slightly different than I do, slightly different than Henry does. We all look at edge data in a very similar manner, but we all have different perspectives based on our experience. I'm actually a former buy side trader, so I bring some of that into the mix when I'm looking at the market and when I'm doing my notes. I've got 4 or 5 points to walk through, as Henry mentioned. Please hit us up with any questions that you might have as we're kind of walking through this process today. I wanted to start with a couple of examples, kind of real life examples. We'll start with Tesla and kind of give you an idea. How can you use the data? What does it look like sometimes ahead of events? And let's go back to, I believe it was about a week and a half ago. We were in the lead up to the robo taxi news, if you recall that. So that was in the news almost every day leading up to the event. This was the event right here. That was the declines after the event. We went from 239 down to 217. Look at the lead up going into it. So sentiment had been declining. So sentiment was right here before the event, and short volume was increasing. I actually looked at this as a possible options play ahead of time because I thought, boy, there's a pretty good chance that we're going to see some volatility tomorrow. Sometimes when I see this type of setup, and I think I've mentioned it before, I'll buy both sides of it. So I'll buy a at the money call and at the money put. So what I'm looking for is volatility. That trade won't work unless there's volatility. It would have worked for me. You can see the declines afterwards. The options though were just like really, really expensive. So I didn't participate in the trade, but I wanted to show you what that setup looked like ahead of a weak event. Market participants were expecting bad news. You can see that declining sentiment, increasing short volume. They got the bad news. Well, look at the setup ahead of earnings. Obviously, at one point, Tesla was up 20 points today. I'm not sure, what they're up now, but sentiment was fully washed out. So it was not good from a sentiment perspective. It was decent from a short volume perspective. So look at the difference between the two. In one, short volume is moving higher. In the other one, short volume, shorts are getting covered. So it was a much better setup going into today's earnings. Could you expect $20 upside from this earnings? No, other than the fact that everything was just completely washed out. And once again, shorts had been covered. And Henry and I were actually looking at Tesla together yesterday. Let's take a look. We'll circle back to big tech for a second. And I want to give you just kind of a preview of maybe, what's ahead next week. So we have a lot of the big tech companies reporting next week, starting with Google on the 29th before the market. Let's just take a couple minutes and walk through them just to get a feel for, how's the market positioned right now? What's the expectations, ahead of the beginning of kind of the big earnings from these companies. So we'll look at Google. Once again, 10:29 before the market opens. I would label Google as steady. Sentiment steady at 5, short volume below trend. We don't see any big bets like we saw in Tesla. No one's expecting any significant weakness. No one's expecting any significant gains either. We look at AMD. They're also here in our big tech portfolio. They're reporting the 29th after the market close. What's the expectations for AMD? Well, much weaker, right? If anything, this resembles Tesla before the robotaxi news. Sentiment very, very weak. Short volumes increasing. Now, short volumes are not above trend, so it's not huge bets to the downside, but this is a much weaker look, and you can see the difference, and you can see how that's playing out in the pricing for AMD. Let's just continue through this exercise with the others that are reporting next week. Microsoft is the next one, reporting on the 30th after the market. What's the Microsoft setup? Well, very similar to Google, very steady. Sentiment steady, short volume steady. Look at Meta, which reports similar to Microsoft after the market on the 30th. Where's Meta? So pull up Meta. What's happening here? Steady, just similar to the Microsoft look. Steady sentiment, short volumes below trends, so no issues with Meta. Take a peek at Apple. Once I can find it. Apple, where are you? All right, you can see that Apple sentiment is actually increasing. So better from a sentiment perspective. You can see short volume starting to increase just a little bit. So maybe a bit of a question mark in regards to Apple. And then lastly, Amazon reports after the market on the 31st. What's happening with Amazon? A little bit of a question mark, steady from a sentiment perspective, but short volumes are above trend. So looking at those, when I was trying to label it, how would I label that? From a big picture perspective, I guess I would label it as a question mark. And you see how that's playing out from demand and supply. Demand is actually bottoming. Well, it's one day, right? You can't make too much out of one day in the market, but we went from 5, we've ticked up to 5.1. That's encouraging. But on this flip side of that argument is short volume is also increasing. So we went through them, one by one. We saw steady for a lot of them, question marks for a few others. And from a big picture perspective, I'd have to label it the same way. A little bit of question marks, but I think we're going to get a lot of emphasis, obviously, on these names next week. We'll watch this a little bit closer as we get to those events. Henry had mentioned, red line trading, and once again, what we're referencing here is from a broad market perspective. You can think of it, red line, as overbought. The term I like to use is the market is just getting stretched. When we get to the green line, which doesn't happen very often, the market's oversold. It's ready to bounce. And for our veterans, you've seen this spreadsheet before. And what I've done over the last 5 years, starting in 2020, just measuring when we move above 6, and then noting when we move back below 6. So in other words, when do we go above the red line? When do we go back below it? You can see it here. When do we go above it? When do we go back below it? What's the market return during that time frame? And then what's the market return looking at that 2 weeks later? So when we look at that from a big picture perspective, once again, here's the criteria. If we were looking back in 2020, that period was negative 1.5. There was the return afterwards. For a 5-year period, and I noted this in the notes either yesterday or the day before, 50 basis points. So that's our return over the red line. That's norms for the market. In other words, the market's getting stretched. The market doesn't fall apart. We continue to post gains, but we don't post the same type of gains that we have in the past. Average days above the red line, a little over 9. So we spend about 2 weeks on average above the red line. The whole market tends to come to kind of a screeching halt. We still post gains. They're just not as robust as they once were. Now, if we look at, when are conditions best above the red line, when are conditions worse? perhaps not a surprise, but as we were coming into the pandemic, we had really bad performance for one red line experience. We had really good performance for another one. And I'll kind of slowly make my way down through the chart so you can see, some of these. We had 5% gains one time, 3% losses, but you get the idea of what it looks like over time. As we came into 2022, this was a bear market. This was probably our worst stretch, and that's probably the worst number in the whole database. So just keep in mind, if you're above the red line, normally you'll continue to post gains. If you're in a bear market, the losses even above that red line can sometimes be somewhat significant. We'll go ahead and kind of slowly walk you through the rest of the numbers. But once again, as I mentioned, for the whole data set, that's 50 basis point gains. During the bear market, that average was negative, so we lost 70 basis points. During the bull market of 2023, we gained 150 basis points. So I just wanted to walk you through that. How can you use that to your advantage? Well, stop getting as aggressive as a buyer, when we get above the red line. You're likely not to make very, very much in terms of directional trading. If you're betting on further gains, let's say you take out a leveraged bet on the SPY, it's likely not going to work out too well for you. Look at the trades here just during the last couple of cycles. We look back in September. We were 569 as we came through the red line. Look at where we were when we came out the other side, 567. So, basically flat line. We look back at August, 560 on the SPY when we went through the red line, and 549. So we actually lost a little bit during that cycle. But just wanted to give you an example of what that looks like. I'll share with you one bad trade yesterday for me, and this was because I had taken a loss, and Henry had mentioned this, daily trading ideas. I drop them into portfolios every day, and I had gotten stopped out on a name, and it's no longer in this daily momentum portfolio today. But SoFi had a good setup yesterday, and I'll show you what this looks like. So I was looking at this as a possible trade. Very strong sentiment at 10, had been just steadily moving higher over time. Of course, the whole market was under pressure yesterday, but short volume had moved lower on a day-over-day basis. And I was like, okay, I like that setup. I'll go ahead and buy it. Well, I bought it. I set my stop loss. For me, I usually set it about 2.5 to 3% below my purchase price. And I was going about my business that day, and then the market just really started rolling over. Well, it's a psychology issue. I had lost money on a previous trade, and I'm like, I don't want to lose, 2.5, 3% again. I got out. I think I lost 1.2, 1.3%. Well, I don't know if you noticed SoFi today, but at one point it was up 7%. Let's see where it's at now, up 5%. So it was a great setup, but I got burned because I had lost money on a previous trade. It happens sometimes, but just remember that, that the setups are this way for a reason, and they do. And I think SoFi was in 100% category, at the time. And sure enough, I would have made, much more than 2%, if I would have just held on to that. So just wanted to share with you.
You're breaking my heart right now, Brian. You're breaking my heart with that one. Which is,
it happens sometimes, right?
That's why we always balance the broad market. Like we were going to mention context, and I wrote it in my note this morning, is understanding that yesterday I didn't expect the move to be as dramatic. We knew that that the banks could be a little bit heavy in what they were holding, and so that Wednesday morning sort of drop. Um, but man, that SoFi one breaks my heart for you because I've been there. Ah,
Oh,
come.
it happens, right? We're not machines, and we make mistakes sometimes. So, live and learn. The data was really good. And I had my stop loss set up. So I'll learn from that one. Uh, hopefully not repeat that. I was just looking through the chat. It doesn't look like there's anything in the chat right now to
Yes.
address.
So let me I'm gonna go back to Chris M. Ask the question about, how do we interpret, so SoFi, I think, was a great example that we look at and we can say, oh, it's hitting the roof sentiment, and pretty lower than average short volume. So, alternatively, Tesla, I mentioned, demand was in the gutter. If you look back on Tesla, pretty sure when it's at one, it tends to bounce off of one. But I don't like
Mhm.
trading one in market structure edge. The point being, and maybe you can help clarify, is when we talk about, when we're, we're focused a little bit on earnings right now in the context, but part of the reason we're focused on it is because the data gets skewed. The data is not as reliable through an earnings report. Can you delve into that, as far as, people who might be checking in with us saying, oh, I'm trading this name because it had this supply demand balance, or even me, who
Mhm.
mentioned Tesla at one, saying, man, there's not a lot of demand, and then all of a sudden it's up 20%. But our overall, perspective on earnings is there's so many large bets that we're not seeing aggregated, that we tend to say, the data becomes less reliable during earnings. But can you speak on that a little bit more?
Yeah, I wouldn't say that the data itself is less reliable, but to your point, there's bets out there. So the data tell us exactly how market participants are positioned, and they can be wrong or right. So sometimes I gave you the Tesla example. I don't know, going into an earnings print, if everyone's right on the short side or if they're right on the bull side. But if I'm looking, like that example I gave you about betting on volatility, if I'm betting that name might be volatile, there's probably a pretty good chance, if a name has 75% short volume going into earnings, and it's just short volume has popped, you know, 25% in the last week. Well, people are getting aggressive with shorts going into earnings. They could either be right, they could be wrong, but there's a good chance of volatility. So that's why I will sometimes play those options trades. And once again, I'm just betting on volatility itself. Can you be wrong, with betting one way or the other on earnings? Sure, absolutely, absolutely. And that I personally don't play earnings, or I don't set up trades ahead of earnings because I don't know if market participants are wrong or right. They could be totally wrong about something. The only one who knows is the company, right? So everything else is subjective, going into the earnings print itself. And recognize that everything's going to get exacerbated after earnings. So if you have the machines that have made a bet one way or another, ahead of earnings, and they get a hold of some number, and the company's like, oh, we reported great numbers, but maybe it was a revenue number that was just, slightly wrong, or what have you. The machines get a hold of that, down goes the stock 5 or 6%. I had one of my companies on the investor relations side asking me about earnings this morning because they were down 5%. They didn't quite understand what was going on. I mean, I know what was going on. The machines were taking them lower. I mean, it just happens. So that was kind of a long-winded answer, but to circle back once again, the data is correct going into earnings, but we don't know if market participants are positioned correctly. So that's the chance that we play, or the chance that we take if we're buying or selling it, ahead of an earnings print.
That's great. Are you following this chat there? We have Michael Q. Last week, Brian, I had mentioned, and I still have this preference, is things that have been at 10 for multiple days. So SoFi,
Mhm.
I think, had been at a 10 in demand for a number of days. I think probably 10 more days. And I mentioned in my desk note last week, I said, I tend to stay away from those things that have moved quite a bit already, or that are sort of hitting the ceiling for multiple days. I like to catch them a little bit earlier. Um, I'll let you respond, because I think it is. I don't think it's so much a difference in opinion. It's a difference of maybe what you were hoping to capture in that move. But what might you say of, like, it's in the moment, it's in the probability's high, it's in our
Right.
daily trading ideas. SoFi 1, 2, 3, 4, 5, 6 days. So to me, like, and that was yesterday, so it's only 5 days. Like, that's right at my limit of saying, but I'm all, as I look at this, I go, yeah, that short volume looks pretty good. And
Yeah.
it is,
Yeah.
but I'm looking
Let's
now. Yeah, I get to 6 or 7, or even, some of these are up there for 8 days, and I go, I'm not less interested in that. But do you think there's a clarification we should make, as far as holding
Well,
those
it's
10?
it's a good
Yeah.
discussion piece, right? And let's look at MicroStrategy from last month. We started hitting. Well, it started hitting our momentum portfolios. I think it was like the 26th or 27th. That's because short volumes had started to move lower. So you can see that MicroStrategy has been at 10 for over a month. Right. So here's a great example where it does happen once in a while. And I forget who I was having this discussion with. It was either Bill or Benham. But we were looking at, could you perhaps, buy some of these names, hold on to them, and maybe buy a protective put on the other side. That's a strategy that might work. Do if you get a name that is at 10 for a week, do you have guarantees that it's going to continue to stay at a 10? No. This is an outlier. I recognize that. But once again, once in a while, if you can catch those outliers, look at what happened to MicroStrategy. If you caught it at 150, even up at 160, and it was trading up to 220. Absolutely incredible gains. Once again, some of these are outliers. Let's look at SoFi. To your point, Henry, personally, the longer that it stays at 10, the harder it is for me to continue to place that trade. So I'm just being honest here. If it's at 10 for longer than a week or so, it does make me hesitate, but maybe I should, revisit that, based on, some of these gains that we see in some of these names. So SoFi, what I think it was 8 days, right? And I would, pay attention a little bit to the short volume side here. Short volume did start to increase a little bit yesterday. So I would perhaps be a little bit more careful, especially when short volume is increasing and is now moving above trend. But I guess the point is, don't shy away from them if they're at 10 for an extended time, but just be a little bit more careful, especially with names that have greater volatility like MicroStrategy. Recognize that some of those names, they're momentum names for a reason, right? They're pounding the table to the upside, but you can also peel off, 7 or 8% to the downside, and I think it probably did that, in that stretch going through there. So, it is a knife that can cut both ways. So just be aware of that. Um, Let me go ahead and go into like my take on what's ahead, kind of getting to the end of our time, and then if there's any other questions, we can address them. I'll start with red line conditions. We already mentioned that, but we're above the red line, which historically means about 2 weeks. Once again, this is central tendencies, about 2 weeks above the red line, and historically 50 basis point gains. Short volumes are increasing, which makes it more difficult for the market to continue to hold on to gains. We talked about this earlier from a big tech perspective. Um, it's a question mark for me. We're getting a little bit of stabilization, but we're also getting increasing short volume. What does that mean? I don't know right now. We'll continue to watch that into next week. Keeping in mind from a context perspective, we'll be coming up on a couple of inflation reads next week, and we'll also be coming up on month-end activity. Think about window dressing from an active investor perspective, and a lot of times passive investors will be truing up portfolios, not truing up based on sector weightings and whether they're underweight or overweight. Here's something interesting. I don't know if it continues or not, but if we look at the last 4 months, we've had 4 months in a row now, or 3 months in a row, excuse me. I'll show you what this looks like. So look at sentiment increasing into month end in July, sentiment decreasing, the market coming under pressure beginning of a new month. The same trend played out in August. Sentiment tops, market goes down in early August. September, sentiment tops, market briefly went down. That was not as much of a decline as we previously saw. Could we see a sentiment top during the next week and once again see declines? I don't know, but we've seen it 3 months in a row. So it's starting to become a little bit of a trend. And I'll share with you one thing that I'm doing. I mentioned this last week, and I was able to make about 5 or 6% on this trade. When there's a lot of uncertainty in the market, I will sometimes put on UVXY. It's a volatility trade. And I just try to slowly put it on over the course. Sometimes it can be up to 2 weeks, but hopefully it's not that long. What I'm looking for is something like yesterday. Volatility went up. It went up like 8-9% yesterday, and I was able to just get out of that trade. Let me see where it's at today. I usually don't like to add to it on days that it's up. I'll probably look at establishing a small position today. And once again, I'm not betting on volatility tomorrow, but I'm just looking at slowly kind of dollar cost averaging into a trade, knowing that we're coming into potentially, a more volatile time frame here over the next couple of weeks. So, any questions, Henry, that we missed here?
No, I think that was excellent, Brian. I think I agree on the volatility, like sort of feel it ticking up. And I think that was an excellent point. I'm not seeing anything on the horizon. I think the tendency for these bigger earnings is the risk is if you're not allocated into those names and they run up, then you're missing out. Whereas you can always cut them loose right at the moment they release. Or you can use a different instrument to hedge using. So I think that's the risk is not being allocated. So that it'll be interesting to see how this like demand, this topping demand and this need for the market to be allocated going into earnings, how all that works out. I'm more tentative at this moment trading than I have been for probably 2 months. Anyways, that's just my own look, but.
Candace, I see your question coming through. How will the upcoming election affect markets? That's a great question. I was talking to a client yesterday who they had been reading a couple of pieces where they thought some states might be undecided even 4 or 5 days, after the election. So if that's the case, and let's say they're a swing state that potentially, plays into whether one party is going to win or lose, what does that bring into play? It brings into uncertainty into play. What will you hear 1,000 times if that occurs? The market hates uncertainty. And then you probably get an increase to volatility. Candace, that's part of the reason that I'm that I will be probably getting into UVXY over the next week and a half or so, just slowly moving in at opportune times, just in case we get, a volatility surge. We might not. I'm more long than short. So if we don't get a volatility surge, I'll make money on my long-term positions. So it's just more of a hedge for me, if that makes sense. So I think that's it, guys. We've taken you a little bit over time. Thank you so much for joining us today. Uh, we should have the recording for you tomorrow. Benham, did you want to stick on afterwards? Did you have a question about setting up those static portfolios? And if you want to, that's fine. Or we could also just, look